Assalamualaikum and hi everyone. I am Yusna Liza Hamid. Today's video we are going to look at accounting for property, plant and equipment under MFRS 116, and in this session we are going to do a tutorial which is a step-by-step tutorial question and answer which will be using a common test May 2021, that is the FAR270 question 1c. So in this session we are going to look at subsequent measurement, initial revaluation of depreciable asset, and also a derecognition of the depreciable asset, which involve depreciation straight line method, and we have yearly basis, and we will be using the estimated and remaining useful life to calculate the depreciation. So let's look at the question now. You have a company, Maryland, bought an office unit on 1st of January 2015, and the cost is 450,000, and the building has an expected useful life of 20 years. So the company adopts revaluation model. So if that is the case, if there is a change to the fair value of the asset, the change must be reflected in the accounts, and that is for the office building. On 31st of December, the building was revalued to 400,000, and this 400,000 is actually the first revaluation. Okay, and you are informed the transfer of surplus on revaluation will only be made in full upon disposal. This means that should the office building be disposed later, then only whatever remaining balances available in the asset revaluation reserve will be transferred back to the retained earnings. At the moment, there is no information regarding disposal of the office building. Right. On 1st of January 2020, the company made a major renovation to its office at a cost of 75,000. So major renovation to the office at the cost of 75,000. This is actually an addition to the office building, to the building, which is, if that is the cost, that was actually to be added to the cost of the PPE, and therefore this must be capitalized. Okay, that was the first one. So let's look at the second one. The second one is regarding another asset, office equipment, that was bought on 1st February 2015. Bear in mind that the company has a useful life, even though not clearly mentioned, but if you look at the year end given in the question at the bottom there, you would see that the year end was 31st of December. So the equipment was bought on 1st February 2015. So this is the date of acquisition, and the cost was 150,000, and the expected useful life of this equipment was 10 years. Again, full year depreciation will be charged in the year of purchase. So let's say this is going to use yearly basis. In our case, you're charging full year depreciation. So in the year of purchase, regardless whether it is 1 year or less, it is going to be charged full year depreciation. However, in the year of disposal, no depreciation will be charged. So we'll be doing that when we do the requirement 3 of the question, right? And the company adopts the cost model. So for this office equipment, the company adopts cost model. And if you look at the previous asset, that was the building, the company adopts revaluation model. That was for the building. Right. So on 28th of August, the office equipment, which is the equipment purchased on 1st of February, right, that was sold at a price of 90 90,000. It was sold at a price of 90,000. All right. So that 90,000 here is the net disposal proceed. And this 2020, 28th of August, this is the date of disposal or the date of derecognition, and the buyer had made full payment on the disposal of the equipment. The buyer made full payment using check. So you are asked to calculate the carrying amount of the building on 31st of December, which is related to the first paragraph. The asset revaluation reserve balance also on 31st of December 2020 related to the first paragraph, right? So the first paragraph means that relates to the blue font, which I used earlier, these two. And you are also asked to do calculation, which is to calculate gain on disposal for the office equipment, as well as the journal entry to record the disposal of the office equipment. Before we start, I would suggest you to draw the timeline diagram. So if you were to draw a timeline diagram, I'm suggesting you to do it separately for the building and for the office equipment. So if you look at the information given for the building, this is for the building. It was acquired, the date of acquisition of the building was 1st of January 15. You can check the information here. And the cost of the building that was purchased, cost that was being acquired, or the initial cost was 450,000. And you were informed in the question, if you extract the information properly, the expected useful life was 20 years. And you use revaluation model. So meaning that on subsequent measurement, you will use revaluation model. Right. So that is what happened. So we'll draw the line. So let's look at what happened with the first asset. So you're informed that the revaluation took place on 31st of December. So if it's 31st of December, this is 1st of January 16, 17, 18, and this is 31st of December 18. So if here the estimated useful life was 4 years, and this is 4 years, here would be the remaining useful life would be 20 minus 4, so it is 16 years on the date where you have your first revaluation. So the first revaluation is here, so you have the remaining useful life to be 16 years. So when was the revaluation? So that was somewhere 31st of December 2018, and it was revalued to 400,000. So the fair value of the building was how much was it? 400,000. So what you need to do is you need to go and compare with the carrying amount. So at that point, that is what happened. So let us look at the information that we are required to calculate first, the requirement of the question. If you look at the question, you are asked to calculate the carrying amount of the building as at 31st of December 2020. Before that, if you look, the carrying amount of the building as at 31st of December 2020. So you need to also consider the renovation that took place on 1st of January 2020. So let's just do that here. Here is 1st of January 2020. After a year, because this is also 31st of December 2019. This is where renovation happened. And that renovation cost was having a major renovation. So this is major renovation. And that was 75,000. And this will be capitalized. It will be added to the carrying amount. Added to the carrying amount. Bear in mind that there was a revaluation that took place here. And there's another changes to the asset here where you have some major renovation. So you are asked to do the calculate the carrying amount on 31st of December, which is here. This is 31st of December 20, and you are asked to find out what are the carrying amount of the building, meaning that the building after considering the first revaluation as well as considering the capital expenditure, the major renovation costs. So that is what happened. And for your information, on 31st of December 2019 here, the remaining useful life has gone down to 15 years because that was after a year, right? So we are asked to calculate the building carrying amount here. So this is what we are asked to do in number 1. So let's look at what we need to do. So what we can do is, if you can see, I've already prepared the workings for you. So first is that you are going to find out the carrying amount as at 31st of December 2020. So when you have the revaluation, normally what happens is that the revalued amount, which is the fair value here, will be the revalued amount. That revalued amount, which is 400,000, will now be the carrying amount as at 31st of December 18, because on revaluation, whatever accumulated depreciation prior to the revaluation, which is the previous 4 years, this will all be eliminated, but that is not yet required. That is task number 2. So we are doing task number 1. So let's look at what we need to start is to start with this amount, the 400,000. That is the revalued amount, the fair value being the revalued amount, and therefore the carrying value is at that fair value, the revaluate under the revaluation model, and there is only first revaluation, and the company adopts revaluation model on subsequent measurement. Okay, let's look at what I have prepared for you. Okay, the first thing to do is to find out what is the carrying value. So we have already found the carrying value. Yeah, so the carrying value, after you have found the carrying value, the carrying value was actually the amount given in the question, right? That is the carrying amount. So let's just show the carrying amount. I will reveal the carrying amount here. So the carrying amount as at 31st of December 18, carrying amount as at 31st of December 18, let us just insert that amount. I have to insert one row up there. Okay, so the carrying amount, we have to go and find out, and that has been given actually, is this amount, which is at revalue amount 400,000. So what you need to find is to find out what is the carrying amount as at 31st of December. Remember, there was accumulated depreciation must also be calculated. So for your information, starting from 1st of January 19, the depreciation would be based on the revalued amount. So meaning to say that during this period here, for this 1 year, you need to calculate based on revalued amount. For each year, it has to be on the revalued amount until there is the major renovation that will now increase the carrying amount. So you calculate the depreciation 1st of January 19 until 31st of December 19, right before the renovation on 1st of January. So divided by 16, because the remaining useful life was 16, multiplied by 1. and that is because the company adopts a yearly basis. So with that, you will have your carrying amount, and that carrying amount as at 31st of December is going to be, this should be 25, and the carrying amount is 375. 375 because the revalued amount minus the accumulated depreciation. Next one is to find out the renovation. So the renovation that was added to the carrying amount was actually 75,000. So we are going to add up the renovation. 75,000 and that will be added to the carrying amount of the building. So that will be added to the carrying amount. Right. So now you know you will get the amount is 75. If you total up, that will give you 450,000, the carrying amount after the renovation has been added. So to get the carrying amount as at 31st of December, you need to go and reduce with the depreciation. So if you reduce with the depreciation, so you need to find out what are the depreciation from 1st of January 2020 up until 31st of December 2020. At this time, the remaining useful life is 15 years. So 15 years, because what you would see is that this is just for 1 year, so times 1. And that will give you the amount 30,000. So if you take 450,000, the carrying amount after the renovation was added to the revalued amount of 375,000, which is 450,000 now. That will give you the carrying amount as at 31st of December 2020 to be 420,000. You don't have to start from the beginning, which is from 1st of January 2015, the date of acquisition. I'm starting from 31st of December 2015 because it was revalued on that date. So let us look at the second part of the question, which is to calculate the balance of asset revaluation reserve for the year ended 31st of December 2020. As you can see here, there was only one of first revaluation. So if it's a first revaluation, what you need to do is you need to compare the fair value or the revalued amount with the carrying value on 31st of December 18. So you need to compare that, and you will have to check whether there is a surplus or deficit by comparing this. So to do that, you need to go and find out what are the accumulated depreciation of the asset before the revaluation took place. So we need to go and find what is the cost. The cost was 450,000, and find out the carrying amount by doing this cost and find out the accumulated depreciation on 31st of December 18. So you will have to remove the accumulated depreciation, and then you will be able to get the carrying amount. So you need to go and do this. So let's do that, because we need to find out what are the revaluation reserve balance. Since there is only initial revaluation, this is initial revaluation, and therefore that is the only balance available because there is no more revaluation after 31st December 18. Alright, so let's look at the balance. So what we will do is we have to first calculate find out the cost. The cost was given, and calculate the accumulated depreciation. So the cost as at 1st of January, which is the date of acquisition, and find out what is the accumulated depreciation. Accumulated depreciation here will be for 4 years, which is from the date of acquisition, DOA, up until date of revaluation. I write there as DOR. So it was 450,000, the cost, divided by remaining useful life 20 years. 20 years is this 20 years. And you will get the amount to be 90,000. Then you will have the carrying amount on 31st of December 18, 360. You will compare with the carrying amount with what? With the fair value. Fair value as at 31st of December, which is the carrying amount after the revaluation, 400,000 at the end of the year. Yeah, at the end of the year means as at 31st of December 2018, the carrying amount is at the revalued amount, 400,000. And therefore the difference is 40,000, and that difference will denote revaluation surplus, which is disclosed as other comprehensive income and later will be shown as heading under the item under asset revaluation reserve in the statement of changes in equity. So that is part of equity movement. Next one, you are asked to calculate the gain or loss on disposal. So if you go to the question, we are done with this. We are done with this. Now we are calculating gain on disposal of equipment. So for the equipment, we can draw another timeline. And this timeline, I'm using green. So if you look for the OE, which is office equipment, it was acquired on 1st of February 15. So from 1st of February 15 until 31st of December 15, this was just 11 months, right? And you would see that the disposal before that, the 1st of January, 1st of February, you can see here, that was 150,000 1st of February. And remember, it was adopting the full year depreciation or yearly basis. So expected useful life was 10 years. So here the cost of the office building was 150,000. The EUL is 10 years. And if you see in the question, you are informed that the company disposed here 28th of August 2020, the office equipment, the whole office equipment was sold at the price of 90,000. And if that is the case, if let's say here is 31st of December 20, the date was of disposal was not this date, it was actually 28th of August 20. So if you look at 28th of August 20, this is somewhere in the current year because our year end is 31st of December 20. So this is DOD, date of disposal, where we have to compare what is the carrying amount on 28th of August with the disposal proceed that you receive on the same date. And the disposal proceed was earlier informed to be 90,000. So we need to go and find out what is this amount. To do that, we need to go and find the accumulated depreciation and take that accumulated depreciation, remove that from the cost. Before that, for your information, the company adopt yearly basis for the depreciation. So the method was straight line method. So if you look at 1st of February until 1st of February 2015 until 31st of December 2015, this was just 11 months, but you still charge full year depreciation. And here from 1st of January 16, which is the beginning of the following year, until 31st of December 19, that was another 4 years. So if you see that you would notice that this is all together here would be 5 years. 5 years, regardless whether the first year it was not even exactly a year. But here you would see this is actually 4 years, 4 years and 11 months, but somehow that is regarded as 5 years because of the yearly basis. So in the year of acquisition, full year depreciation would be charged, but this is the year of disposal. So from 1st of January 2020 up until 28th of August 2020, because you adopt, your company adopt, our company adopt the where was it, full year depreciation. So there is going to be no depreciation. It says here none in the year of disposal. So for the year of disposal is 2020, 31st of December 2020 was the year end, but it was disposed here. So therefore here will be no depreciation. So depreciation will be provided in full in the year of acquisition, which is in year 2015, even though it is less than a year. So let's look at what I have prepared here for you for the calculation. So we will start off with the first part. Office equipment was purchased on 1st February 2015. The cost was 150,000. The accumulated depreciation that we are concerned is only up until 31st of December 19. The reason because in the year of disposal, there will be no depreciation. So here, if you can see what I've already put some little note here. In 2015, it was just 11 months. So however, we still charge full year depreciation in the year of purchase, and therefore that was due to yearly basis. So therefore the accumulated depreciation, if you were to calculate, it would be 150,000 divided by remaining useful life 10 years times 5. 5 years is from 1st of February up until 31st of December, even though not exactly 5 years, but 11 months is considered as full year depreciation. Next one is to look at the situation in the year of disposal. So remember, year of disposal is somewhere in 2020, which this is the date of disposal. So accumulated depreciation on the date of disposal, on the year of disposal, which is from 1st of January 2020 up until 28th of August 2020, that will not be provided. No depreciation will be provided because it says there that no depreciation is provided in the year of disposal. Even though in the current year 20, which is year 20, the asset is still with us for 8 months, but we will not provide any depreciation because of the the fact that we adopt the yearly or the full year depreciation. So therefore there is no depreciation. So the carrying amount as at 28th of August is remain at 75,000. If let's say this is not a yearly basis, monthly basis, you still need to provide depreciation. You compare with the disposal proceed and you will get 90,000. And here, since disposal proceed is more than the carrying amount, so therefore we will have earn a profit, and that would be 15,000, and this will be recognized to the SOPL as part of other income. So let's look at the journal entry. Let us look at the journal entry, and this is the journal entry. This is to record the proceed that you received in cash, the proceed received, and when you receive the proceed that was due to the disposal, the depreciation related to the disposed asset must be eliminated. So that's why you are debiting your accumulated depreciation, because you do not just remove the asset physically, but you also need to go and remove all the related record. And this one is to derecognize the asset at cost that you dispose. So that was being derecognized. That is why it was being credited, since we derecognize, and the gain on disposal will be taken to the SOPL, statement of profit or loss, under other income. That was the journal entry as required by the question. So that's it for this presentation. I hope this helped you with the understanding of MFRS and the accounting treatment for MFRS 116 for derecognition and initial revaluation, particularly involving the depreciable asset. I will see you when I will see you. Till then, have a pleasant day ahead, and always practice to make sure that you will achieve almost no mistake. Till then, I'll see you when I will see you. Assalamualaikum, and have a pleasant day.